Hey guys, this is Money Value. My name is Olga and I'm back to answer the most popular question, how to invest in 2021. Since the Q4 reports are out, we can finally draw a conclusion. The only thing I'm sure about now is that life is unpredictable. I can't see the future, and that's why anything I'm gonna say today can't be considered the ultimate truth. It's just my opinion, and whether trust me or not is up to you. Though I hope this video will help you form your opinion. In 2020, the economy was tied to the one factor we all are tired of, COVID-19. And since the top stocks in 2020 benefited from the lockdown-related trends, in 2021 we're looking at a healing economy and coming back to normal. At least that's what we hope for. Anyway, while hoping for a better life, you might be interested in creating it. I'll remind you the best ways to make passive income and the ones that would be the best investment this year. The first one is real estate. I've already talked about it, but here's why it's good for 2021. You see, there is a steady rise in residential real estate prices as well as turbulence in the commercial real estate market, and the whole sector may look like a mixed bag. But this is the reason why it deserves your attention. Basically, there are two ways you can make real estate a source of passive income: by buying and renting it out, and by investing in REITs. Real estate investment trusts become more and more popular, though the sector as a whole didn't do that great in 2020. Based on the FTSE in a REIT, US real estate index REITs have shed 7.25% through December 24th, but that comes on the heels of a 28% gain in 2019. We can't guess what's gonna happen in 2021, but I hope that the economy will recover and so will this sector. Obviously, the commercial sector suffered because of the employees being sent to work remotely. They don't need an office if they work from home. Anyway, most investors turn to real estate when the stock market declines, since the returns are usually comparable to the stock market. It's a good alternative, you know. Another way to make money is by buying accommodations and renting them out, or if you want, selling them in a few years. This one would be a good choice now. The housing prices keep growing. For example, the typical US home was worth $266,000 in December, up 8.4%, or $20,580 from a year ago. It means you would have made $20,580 in a year. Well, there are also taxes and everything, but the figure sounds good, doesn't it? As for the renting part, it's pretty obvious. You can buy a few apartments, rent them out, and use those money to pay off the mortgage. After you are done with your debts, you are beginning to make actual profit. The second investment is opening a saving account. And yes, you've heard me right. If you have concerns about your future and don't want to dive into real estate, or other ways of making passive income are less important than upcoming spendings, don't do that just yet. If you have enough cash, you'll be able to invest wisely when you see a great opportunity. And by saying cash, I don't mean an envelope under your mattress. If you are not ready to invest, make sure you don't lose any money. And while the certificates of deposit or US Treasury securities won't help you make money, you should consider other banks that offer a higher interest rate. For example, CIT Bank, with the highest annual percentage yield of 1.75%. It goes to those who can maintain a $25,000 balance. Don't freak out, there's another option of contributing at least $100 each month. It means you can get the highest APY just by regular deposits. However, you only get 6 transactions per statement cycle without any added charges, and if you miss your $100 deposit, APY falls to 1.25%. Another one is Discover, with the maximum APY of 1.60%. There's also Betterment that offers a variable rate of up to 1.52% depending on the amount of your deposit. Anyway, there are many other saving accounts like Ally with 2% return or Barclays. You can easily Google them. Or maybe you've already tried something. Feel free to share your experience in the comments. Once again, it won't bring big returns, but at least you'll be ready for something greater. Saving up is important too. If you are younger than 59, you will probably find it funny, but my next advice: set up a Roth IRA. Your whole life is ahead of you, and it's only natural that you don't care about the day you turn 59 and a half. That's right, you can withdraw your money from the retirement account when you're 59 and a half, but that's not it. You will also be able to withdraw any profit you've made tax-free. You can do it sooner, but in that case, you'll face a penalty. Actually, the penalty goes with profit only. Your contributions, since it's already taxed, can be withdrawn with no problems or fees. For example, if you put $10,000 and you got $2,000 profit, you can withdraw wherever you contributed tax-free anytime, but that $2,000 either when you reach the required age or with the tax plus 10% fee. You don't want to do that, so just be patient. It's not really an investment, well, investment in the future for sure, but what I mean is you don't invest in the IRA, you invest with it. When you get this account, you'll see how many opportunities there are, stocks, indexes, even real estate. Anyway, get an IRA and check it out yourself. I can't believe I haven't mentioned investing in index funds on my channel yet. You're all familiar with the S&P 500, so you know what I'm talking about. But in case you don't have more than $3,700 of free cash to invest, I'll let you know that there are many other indexes and index funds that are cheaper. Well, trust to be told, they sometimes have a minimum investment that is around $3,000, but it's still better than spending it on just one share. The most obvious advantage of index funds is that they have consistently beaten other types of funds in terms of total return. The drawback is whenever the index falls, your portfolio falls as well, but there is no risk-free investment, trust me. And one more thing, keep in mind the expense ratios while choosing the index. If you're looking for something cheap, check Fidelity Zero Large Cap Index out. There are no minimums to invest, by the way. There are also Schwab Index Fund that is a bit more expensive, and SPDR, iShares Core, and Vanguard. The last three are even more expensive, making one share not cheaper than $345. The next one simply can't be omitted, but I won't stop here for a long time. The most obvious answer to the question of what to invest in is stocks. Either it's a dividend-paying company or not. If you don't trust the stock market with the stock growth, you better consider dividends. In that case, don't forget about the compound interest to boost your profits. If you want to be safe, try dividend aristocrats, for example ExxonMobil, Walgreens, and AT&T, but feel free to choose something else. The list of dividend aristocrats includes 65 companies. The last one I'll mention is investing in business. This one is about the highest return. If you have your own business, see if investing an extra 1,000 or 10 into marketing will bring you more profit than you could ever hope for. Or maybe getting new equipment will boost the manufacturing, ergo your profit. If you don't have your own business, maybe you have a side job or another way of making money, you could invest in yourself by signing up for a bootcamp or for an online course that would make you a better professional. The return might not be obvious, but your education will never be unappreciated. Anyway, investing in business is risky. You never know if the result will be exactly what you were hoping for, but in most cases it is, and it's totally worth it. Just make sure you have a plan and you know exactly what you want to do with your money. If you're ready to take your chances, think about marketing. I guess it's key to success nowadays. You could rebrand your business and reach out to new customers, or just turn to advertising to expand the client base. And while we're talking about business, since you may not have it yet, here are 2 ways to start one. The first one will be good for those who have their own idea. Whether you've come up with a new device for people suffering from dementia or want to launch a website for young artists, you've almost got your startup. Now that you have an idea, you have to organize it and make a business plan. The next step is financing. You can't do anything if you don't have money. If you have enough, you could invest it yourself, and that's what I was talking about. Well, if you don't, you will have to raise funds, but that's a different story. The second one is franchising. An initial fee and regular royalty will give you the right to do business under the franchisor's name and system. It's like operating your own McDonald's, just not exactly your own. On the upside, you'll probably get a guide and advice on how to develop your business the best way. It would also include following several rules, but once again, it's not a tutorial, I'm just letting you know what your options are. Anyway, whether you launch your startup, choose a franchising model, or start your own business in any other way, remember that it's both risky and difficult. But what can be better than watching your own baby startup grow into a big and successful business? That's all I've got for you for today. Remember that the very best and safest investment is an investment in yourself, and it includes eating healthy food, exercising, and budgeting. Let me know what you were buying this year, smash the like button, and share this video with your friends. Thanks, see you soon.